Pakistan's stock market just did something almost nobody expected, capping off another remarkable year. While many economies are still struggling with inflation, uncertainty and slowing growth, Pakistan's benchmark KSE-100 Index closed fiscal year 25-26 at a record high after delivering a 46% return in US dollar terms. Even more striking, over the last 3 fiscal years, the market has gained more than 340%. So what's behind this rally, and what are investors seeing that has kept momentum going despite periods of sharp volatility? Let's take a closer look. The stock market closed fiscal year 25-26 on a historic note, with KSE-100 Index ending at a record 180,000 points. That's a 44% gain in Pakistani rupee terms and an impressive 46% return in US dollar terms, making Pakistan one of Asia's stronger performing equity markets during the fiscal year. But this wasn't a straight line rally. The market's performance reflected a combination of easing inflation, lower interest rates, improving corporate earnings, abundant liquidity and growing investor confidence. Analysts have also pointed to Pakistan's macroeconomic stabilization under the IMF-supported reform program as an important backdrop. According to Topline Securities, the KSE-100 Index has now generated cumulative returns of 335% in rupee terms and 347% in dollar terms since fiscal year 23. The journey, however, wasn't without turbulence. The first half of fiscal year 26 saw the market climb nearly 39% despite devastating floods during July and August 25. The second half was far more volatile amid US-Israel war on Iran, Hormuz crisis and whatnot. The index reached at an all-time high of 189,000 points in January before falling nearly 29% to 146,000 points in March as investors reacted to geopolitical uncertainty and changing market sentiment. Yet, by the end of the fiscal year, the market had recovered, reclaiming the 180,000 point mark. The story wasn't just about rising share prices. Pakistan's capital markets also saw broader changes. Investor participation increased significantly, with the number of investors accounts rising 49%. Around 40% of new investors were from Gen Z, highlighting growing participation from younger investors. Overall, Pakistan now has about 1.4 million public market investors. Corporate earnings also remain supportive. Listed companies reported a 22% increase in profitability during the January-March quarter, while cumulative profits for the first 9 months of fiscal year 26 was up 9% compared with the previous year. The market itself has also become deeper. Pakistan now has 17 listed companies with market capitalization exceeding $1 billion, up from just 3 in fiscal year 22. The Pakistan Stock Exchange also hosted 13 IPOs during fiscal year 26, the highest annual number of new listings in 2 decades. We spoke to advisor to the Finance Minister, Saeed, who told us that the stock market reflects improving economic confidence while also helping companies raise capital for the future growth. He attributes the market's performance over the past 3 years to prudent fiscal management, structural reforms, moderating inflation, lower interest rates, stronger external buffers and policy continuity. Looking ahead, many market participants believe the momentum could continue if the macroeconomic environment remains supportive. Vikas Ghani, head of research at JS Global Capital, told us that the Pakistani equities continue to trade at lower valuation multiples than several regional markets, including India, Malaysia, Vietnam, China and Thailand. In his view, that leaves room for further upside if economic stability is sustained. It is also worth noting that the KSE-100 has returned 51% during calendar year 25, following gains of 84% in 24 and 55% in 23, marking a third consecutive year of strong double-digit returns. Stock markets don't just tell the story of today, they price in the possibilities of tomorrow. And for 3 years in a row, Pakistan's equity market has reflected growing optimism about the country's future. Challenges remain, but so do the opportunities. If the current momentum is sustained, the years ahead could mark the beginning of an even stronger chapter for Pakistan's economy and its capital markets.